And now for our next news special report.
Welcome back, Gary Franchi here. You're about to dive into a financial odyssey where the stakes couldn't be higher. Imagine a future where your digital wallet could be worth over 4 times its current value. That's right, Bitcoin is on track to hit a monumental $150,000 by 2025. And while the Federal Reserve clenches its fist tighter than ever, Bitcoin stands firm, unyielding above 34,000. But there's more to this story, a narrative so compelling that missing it isn't an option. Why are Bitcoin ATMs becoming as commonplace as a soda machine? So stick with us. By the end of this report, you'll grasp the seismic shift in our economy and understand why this isn't just news. It's a narrative that will shape the future of our republic. So don't go anywhere. The final thought will be a game changer. Now, folks, before we launch into this financial saga, let's take a moment. The top-tier news you get here is buoyed by our sponsors, the unsung heroes of our daily operations, and supporting them, that's akin to cheering us on, affirming the need for the uncompromising journalism that we're committed to. And it's not blind support. These products are hand-picked and personally vetted, ensuring that when you back them, you're fostering the unvarnished stories we bring to you. In the spirit of cutting through the excess, let's talk about excess belly fat, the insidious kind that encroaches on vital organs. To combat this, many, myself included, as you can tell, are turning to a groundbreaking substance designed to diminish fat storage and bolster metabolism. If you're intrigued, lock in a 51% discount for the rest of the month or until stocks last at trimwithgary.com. Now, the fiscal landscape we navigate today is as volatile as it is unpredictable. Amidst this, Bitcoin has emerged not just as a digital asset, but as a bastion of stability for investors. In a year that's seen bank failures and macroeconomic tremors, Bitcoin has doubled in value. Its resilience is not an accident, but a testament to its newfound status as a safe haven in these troubled times. The acceptance of Bitcoin has seen a tectonic shift from the days it was dismissed as a risky bet. Now it's a mainstream contender, with the surge in its value potentially the beginning of a bullish revolution. And the forecasts are bullish, with experts like Bernstein analyst Gautam Chungi predicting a price of $150,000 by mid-2025. This isn't mere optimism. It's a calculated projection based on concrete catalysts like SEC-approved ETFs and the anticipated Bitcoin halving in April of 2024. Now, as you've heard from Bitcoin's expert at Bernstein, the bullish outlook for Bitcoin doesn't come from thin air. It's grounded in analysis and historical trends. But if you're wondering how this analyst came up with the figures, it's not just sophisticated financial models. Sometimes it's about patterns and precedents. To give you a much clearer picture, let's turn to Lark Davis, a voice many of you might recognize from the crypto world. He discusses the idea of diminishing returns and why. Historically, each Bitcoin rally has been less explosive than the last. It's a blend of art and science, and Davis has a way of breaking it down that anyone can grasp. Watch.
So, if we were to expect a simple, let's just say 100% move above the previous all-time high. Now, that's based on the idea of diminishing returns. That's, every impulse is a bit less than the previous one. Then that would bring us of a price target around $140,000. Not bad. But how do we arrive at such a number anyway? Well, just, pull it up out of your butt, right? Like all good predictions. Because at the end of the day, literally no one knows what is going to happen in the future, especially when it comes to price predictions, right? We're all just guessing. So let's talk about some interesting guesses that have been made and some interesting predictions. We have, for example, some well-known players that are also talking about that $150,000 area. People like Pantera Capital. They're saying we can see $149,000 as you see in this chart here. Basically, the idea is based on, of course, again, the diminishing returns thought that each market cycle we rally just percentage-wise less, even though we keep getting to bigger numbers. The first halving rally saw the price move by 93x, second by 30x, the third by 7.8x, and now Pantera is calling for 4.2x from the time of the halving. They think at the time it's going to be Bitcoin to be worth around $36,000. Now this next chart I want to show you is called the Bitcoin Rainbow chart. Basically, this is a logarithmic growth curve for Bitcoin with some nice colors laid on top of it for fun. You can see the first 3 Bitcoin peaks ended in the red zone. The previous bull market top in 2021 didn't actually rally into the red zone. It only reached up to the orange zones. Again, we're seeing indicating the idea of potentially diminishing returns per cycle. If the next peak only hits the orange bands, then it gives us a potential price of around $150,000 as well.
Now, as you digest that, remember this isn't just about numbers and charts, it's about understanding the shifting tides of our economy. Traditional assets like gold or real estate have long been the safe havens of choice, but now as Bitcoin's resilience and acceptance grow, it's carving out its own space as a legitimate contender in the investment arena, challenging the old guard and offering a new form of financial security. But what does this mean for the average Joe? It signals a shift in investment paradigms. Traditional assets are no longer the only safe harbors. Cryptocurrency, once the Wild West of finance, is now a legitimate and increasingly sought-after asset. This change in perception has been hard-earned, with Bitcoin proving its mettle against not just market volatility, but also a hedge against inflation. And speaking of inflation, the Federal Reserve's stance remains unyieldingly hawkish. Bitcoin, meanwhile, continues to exhibit bullish tendencies, holding its ground above $34,000. This resilience comes even as we witness mild profit-taking within the crypto sphere. It's a balancing act between cautious optimism and strategic positioning as we teeter on the brink of a bull market cycle. And the Fed's unwavering commitment to quell inflation has led to a high-stakes financial standoff. But here's where it gets interesting. Bitcoin's price isn't just holding. It's a beacon for macro investors and hedge funds. Portfolio manager Matthew Zai of Kryptonite Assets Management points to the Fed's interest rate policies as a pivotal factor for investors to consider, especially when it comes to Bitcoin's prospects. The Fed's persistence in fighting inflation, with pauses likely to continue, sets the stage for a more conducive environment for more traditional and alternative assets. The undercurrents of the economy are shifting, with disinflation and softening economic data painting a complex picture. Yet this isn't a sign of weakness, but a nuanced landscape where Bitcoin could thrive. Treasury yields are declining, equity markets are responding favorably, and amidst this, Bitcoin's strength becomes more apparent. And it's a fertile ground for Bitcoin's growth, backed by solid conviction from its holders, 88.5% of whom haven't budged on their investment in the past 3 months, a period which saw Bitcoin climb over 44%. Now, this steadfastness in the Bitcoin community is a microcosm of the broader trend. Despite the Fed's hawkish stance, Bitcoin ATMs are sprouting out across the nation, from shopping malls to gas stations, signaling a grassroots-level adoption that could fuel future growth. These kiosks, resembling traditional ATMs, offer a gateway for the everyday American to tap into the crypto market, providing instant access to Bitcoin with cash. The proliferation of Bitcoin ATMs is more than just a convenience. It's a revolution in how we transact and transfer value. 2/3 of Bitcoin ATM users are utilizing these machines for remittances on online purchases, showcasing the functionality and real-world utility of cryptocurrency. It's a narrative that extends beyond the screens of avid traders to the hands of the average consumer, democratizing access to digital currency. However, with innovation comes caution. The rapid expansion of Bitcoin ATMs has not been without scrutiny. These machines have been under the spotlight for their potential use in illicit activities due to their transaction speed. But it's essential to see this in context. The vast majority of Bitcoin ATM transactions are legitimate, offering a vital service in today's fast-paced world. If you got value from this report, go ahead and tap subscribe. Now, as we wrap up, consider the gravity of what we've discussed today. Bitcoin's ascendancy to $150,000 by 2025 isn't just a number. It's a paradigm shift in wealth, technology, and the very fabric of our economic system. As Bitcoin ATMs become as ubiquitous as vending machines, they herald a new era of financial independence and efficiency. The story matters because it's not just about investment, it's about the evolution of money and the empowerment of the American people. It's a narrative that transcends finance, touching on liberty, sovereignty, and the pursuit of a more decentralized future. Remember, as we navigate this digital frontier, the choices we make now will echo through our republic's economy for years to come. So keep watching, keep questioning, and stay informed. This is Gary Franchi, signing off.
Congratulations, you made it to the end of the video.
Now keep up your quest for truth with this next news report. And if you found our channel enlightening, join the millions who agree with you. Tap subscribe. Thank you for watching the Next News Network.